Welcome back to the Falcon's Nest. I'm your host, Connor Graham, Head of Financial Advisory Services at Graham Wealth Management. Today's topic is beating inflation in retirement and why it is the number one priority for retirees. The first priority for investing for retirement income is to cover inflation for several reasons. Inflation refers to the rise in the general level of prices of goods and services over time. As prices increase, the purchasing power of the dollar decreases, which means that you can buy fewer goods and services with the same amount of money. The gradual reduction in purchasing power over time can erode the value of a person's retirement savings. For example, if inflation is running at an average of 3% per year, then the cost of living doubles every 24 years. This means that a person who retires at 65 will need twice as much money to maintain their standard of living 24 years later at 89. This is significant consideration for someone who's planning for retirement and wants to ensure that their life savings will last as long as they do. If a person saves $100,000 for retirement and inflation is 3% per year, then after 10 years, that $100,000 will have the purchasing power of only $87,000. This can have a significant impact on one's standard of living in retirement. Another reason why covering inflation is the first priority is that it helps mitigate the risk of outliving their savings. If their savings do not keep pace with inflation, then they're more likely to run out of money during their retirement years. This is why it is important for retirees to invest in a diversified portfolio of assets that can help them keep pace with inflation and preserve their purchasing power. One example of an investment that can help cover inflation is stock. Stocks are pieces of ownership in corporations and allow investors to have a legal claim to their profits and cash flows. Since corporations offer goods and services to consumers, they have the ability to pass the costs on to them, allowing the corporation to have the ability to match the rate of inflation. More mature corporations may even pay dividends that match or even exceed the rate of inflation, allowing the retiree's portfolio to preserve and even grow purchasing power throughout retirement. Another example of an investment that can help cover inflation is real estate. Real estate is an investment that has the potential to increase in value over time as a result of inflation. As the demand for housing increases, the cost of living also increases, which can drive up the value of real estate. This can increase the cost of rental income from a property and provide a stream of income that matches inflation. This is why many people invest in real estate as a way to protect against inflation and preserve their purchasing power. In conclusion, covering inflation is the first priority for investing for retirement income because it helps to preserve the purchasing power and reduce the risk of outliving one's savings. By investing in a diversified portfolio of assets containing stocks and real estate, retirees can help ensure that their savings will last as long as they do and help them maintain their standard of living in retirement. Thank you for tuning into the Falcon's Nest for your financial information. Remember to like, subscribe, comment below, and click the bell icon to get notifications of future uploads. And as always, consult a financial professional before acting to determine what is best for you.